Sometimes a simple moving average upgrade can completely change the way you see a chart. And that's exactly what the T3 does. In this video, I want to walk you through a very clean trading strategy built around the T3 moving average. If you don't know what it is, think of it as an advanced moving average with a special smoothing algorithm created by Tim Tilson. We'll set it up, add one more indicator, and then I'll show you exactly how to use this combo to find high probability buy and sell setups. Just stay with me till the end so you don't miss any rules. I'm on TradingView, and for this strategy, we start by adding two T3 moving averages. Open the Indicators tab and search T3 MA ribbon. Select the one by just Uncle L. Once you add it, you'll see two T3 lines on your chart. Now we'll optimize them for our strategy. Open the settings of the indicator. You can do that from here. In the inputs, set the fast length to 11 and the slow length to 34. Also make sure the calculation source is based on Heiken Ashi candles, because that's how this script is designed to smooth out the price action. Then go to the Style tab, scroll down to the ribbon section, and increase the opacity so the colored band between the two lines is clearly visible on your chart. Next, we add the second part of the setup, RSI. Open Indicators again, type RSI, and add the standard relative strength index. After that, open its settings. In the Inputs tab, change the RSI length to 2. This makes it extremely sensitive so it reacts quickly to short-term momentum shifts. Then go to the Style tab and set the upper band to 80, the lower band to 20, and disable the RSI moving average line because we don't need that for this strategy. Leave only the main RSI line and the bands visible. Now the whole setup is ready on the chart. Now let's break down what we've built here. We're using two T3 moving averages, the faster one with length 11 and the slower one with length 34. Based on their crossover, the ribbon between them changes color. When the fast T3 is above the slow T3 and stays above it, the ribbon turns green, and that tells us the market is in an uptrend. When the fast T3 drops below the slow T3 and stays below it, the ribbon turns red, and that tells us we're in a downtrend. So the ribbon color is our trend filter. Green ribbon means we only look for buys. Red ribbon means we only look for sells. Then, inside that trend, RSI with length 2 is our timing tool. Because it's so fast and we're using 80-20 levels, it helps us spot short-term overbought and oversold conditions inside the main trend, so we can time our entries on pullbacks instead of chasing candles.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
Let's start with buy trade setups. So, when the ribbon is green, we know buyers are in control, and our job is to wait for price to pull back into that ribbon and then resume upward. We need two conditions to confirm that pullback. First, price must completely move inside the T3 ribbon, not just touch it with a wick. You want candles actually living inside the band, like you see in a proper retracement. Second, at least one of the candles that forms while price is inside the ribbon must push RSI below 20. That RSI dip below 20 tells us we have a short-term oversold condition happening inside an uptrend, which is exactly where we want to look for a continuation move. Once both of these conditions are met, price inside the ribbon and RSI below 20, we don't jump in blindly. We wait for confirmation that the pullback is likely over. For that, we wait until a candle closes fully above the ribbon again. When that candle closes and price is back on top of the band, the buy signal is confirmed. In practice, we open a buy position right at the close of that breakout candle above the ribbon. The stop loss goes below the low of the pullback, under the deepest swing that formed while price was inside the ribbon. Take profit is set at 1.5 times the risk. This keeps the strategy simple and consistent. You'll often get multiple buy opportunities in the same uptrend. For example, After the first buy position, price may continue higher, then dip back into the ribbon again. As long as the ribbon stays green, we treat it as the same trend. If the price steps into the ribbon again, one of those candles pushes RSI below 20, and then eventually we get another candle closing back above the ribbon. Same rules, same logic. That second close above the band is another valid buy trade entry, with stop loss below the pullback low and target at 1.5 R following the trend. Just like we can see we got one over here. But sometimes you'll see something different. Price drops into the ribbon, RSI goes oversold, but instead of closing back above the ribbon, price breaks down under it. When that happens, we do not force a buy. A clean close below the ribbon is an early warning that the uptrend might be ending. At that point, we stop looking for new buy trades and wait to see if the ribbon flips from green to red. If the color eventually turns red, we treat that as a potential shift into a downtrend and start preparing for sell setups instead of buys. Now let's talk about sell trades. When the ribbon is red, the fast T3 is below the slow T3, and sellers are in control. In this case, we only look for short entries and we again use pullbacks into the ribbon to get better prices. The logic is the mirror image of the buy setup. First condition: price has to move inside the red ribbon. Second condition: while price is inside the ribbon, at least one candle should push RSI above 80. That RSI spike above 80 inside a downtrend tells us the short-term move is overbought against the main direction, which often sets up the next downward move. Once we get both conditions, we wait for confirmation. This time, we wait until a candle closes below the ribbon again. When that candle closes and price is back under the band, the sell signal is confirmed. In practice, we open a sell right at the close of that candle. Stop loss goes above the pullback high, over the highest point that formed while price was inside the ribbon. Take profit is again set at 1.5 times the risk. Usually, a strong downtrend will give you more than one sell signal. Price will drop, then pull back into the ribbon. RSI will spike above 80, and then price will roll back under the band. Each time you see that pattern with the ribbon still red, it's another valid sell trade entry. In a sideways market, price can keep dipping into the ribbon and back out without going anywhere meaningful, and RSI will keep moving above 80 and below 20 just because there's no real direction. That's where false signals increase. That's normal. No indicator and no strategy can remove losing trades completely. Because of that, risk management is a non-negotiable part of this system. Even with accurate entries, you will have losses. That's going to be it for this video. Make sure to hit the like button and subscribe to my channel. Thanks for watching the video till the end. I'll see you guys in the next video.